Hi, everyone. How are you? I hope that all is well. Now, today is Sunday, and I usually interview an entrepreneur on Sundays. However, the entrepreneur did not show up. Hence, you have me. But ordinarily on Sundays, I interview entrepreneurs. They're either millionaires, multimillionaires, or entrepreneurs. And the reason behind that is to expose you to different business ideas. So you can see people that look just like you doing great, tremendous, wonderful things. So tune in on Sundays, and normally you will find them here. But as of today, it was a no show. So you will see me, and I'm going to be talking to you about 4 ways to finance rental property. So, as you know, right now, inflation is at an all time high, and it is discouraging people from buying property. But you can take this information in the event that you decide to look for property at a later time, or if you're looking for property right now. Generally, it's a good idea if you desire rental property to just start the process now because the process it takes a while. So, if you're going to buy property, you might as well start the process right now. So, we'll get into the number one way of financing rental property is the one that most people are most familiar with, and that is the bank, conventional. Conventional. So, conventional with the down payment is usually 20 to 25% of the purchase price. The bank will pay the rest. So, say for example, you are purchasing $100,000 home. The bank will give you 80,000, and then you're responsible for putting that 20% down. So that is how it works with the conventional. So this is the most popular. It is generally a 30-year fixed interest rate. So your interest rate is not varying, it's fixed. So you know what your monthly payment is going to be every month. It's going to be the same every month because it is a fixed interest rate. So you don't get surprises. However, because of taxes, your monthly payment will end up going up anyway as taxes go up, but it won't go up as a result of unexpected interest rate going up. You have a fixed interest rate, 30-year fixed. There is an origination fee, and this is the cost that it takes to get the deal done. This is the cheapest interest rate. This way is the cheapest interest rate. The credit score, they generally require a credit score of 680. And so if you're thinking right now, I don't have a 680, then what you can do is go to NACA, spelled NACA. It is legitimate. I know firsthand it is legitimate. And with NACA, it doesn't matter what your credit score. Your credit score could be a 500 and you can still get into a beautiful home. So back to the primary way, conventional. They require a credit score of 680. They have very rules, strict rules about your credit, how long your working history is, how much money you make. They have very strict rules, and then they're looking into your checking account of money going in, money going out. So if they see a lump sum in all of a sudden, that gives them reason to question, where is this lump sum? Is this a gift or what? So when it comes to conventional, they are very strict, have very strict requirements. They are verifying where your money is coming from, and it is limited to 10 loans. So there is a 10 loan limit with conventional. Okay, so number two, we're going to talk about small local banks. Well, small local banks, people don't usually think about going to small local banks. Small local banks will be a little bit more lenient. They desire for you to get the home and they desire for you to borrow money because they are making money when you borrow money. So, small local banks, something that a lot of people don't think about. Uh, Small local community banks, they're also called portfolio lenders, and they have an origination fee anywhere from $250 to $1,000. It varies. And you can also ask that your origination fee be lowered. Doesn't hurt to ask. It is variable. Their interest rate is reasonable. They have a reasonable interest rate. It is a little tiny bit higher than the conventional, but not by that much. So a reasonable interest rate, and the loan is for from 20 to 25 years with the local small banks. Also, it is a fixed interest rate from 3 to 5 years. But after that, the interest rate becomes adjustable, meaning that you will see an increase in your monthly payment. So make sure that you ask, what is the cap on the interest rate? How high can this interest rate go? And not only ask the question, but look in the contract and have them show you in the contract the highest that this interest rate can go. What is the highest this interest rate can go? So, like I said, it's fixed from 3 to 5 years. After that, it becomes adjustable. It's adjustable according to what the markets are doing. So, for example, right now the markets are around 5.9%. So they would raise it to around 5.9%. So this is what the local small banks. They require a credit score of 680, but it could be less. They are a little bit more lenient than your normal bank. The down payment required is 15%. So they have an 85% loan to value, meaning they're going to give you 85%, and then you bring in 15% to purchase the home. So, with the local small community banks, you can have unlimited loans. There's no limit on how many properties you can buy. And like I said before, they desire to loan you money because when you uh, borrow money from them, they are making money off of you. So they have the desire to loan you the money. So, what you would do if using a local small community bank, you would walk in and ask to speak to the commercial lender and then ask the commercial lender what products they have for real estate investors. And so the ideal here is to establish a relationship with the commercial lender. In the event that you decide that you want to keep coming back and buying more properties, a relationship is pretty important there because things like the down payment becomes negotiable. The origination fee becomes negotiable, depending on that relationship that you have fostered with the local small community bank. Speaking to the person called commercial lender. So number three, you have the private lender. And so what a private lender is anybody that you know who is willing to loan you the money. Um, but as you know, the private lender, they want something out of the deal. They're not just giving you money out of the kindness of their heart. They are looking for a portion of that cash flow that you are getting, or they are looking for a lump sum. So everything is negotiable when it comes to the private lender. The origination fee is negotiable, the down payment is negotiable, and all of the terms and conditions are negotiable. It is between you and the private lender. So, what you would do is come to an agreement, have everything in writing in a promissory note. And then what would happen is if you did not pay the mortgage, they can take the house, they can foreclose on the house with the private lender. And so that is the reason why they are willing to loan you the money. First of all, they want a portion of that cash flow or a lump sum. And then they know that if you don't pay the mortgage, that they can always come and take the house and foreclose on the house. That is the private lender. And then lastly, you have your hard money loan lender. And the hard money loan lender, this is last because it's the most expensive. So this is the last ditch effort. If everything else does not work out, then you will go to the hard money lender. They are the most expensive. What a hard money lender is actually people who are in the business of loaning money. So this is a business for them. It's like a company. Hard money, hard money lenders. And so they have their own rates and their own terms and their own qualifications. They have a origination fee, and this is the fee that you have to pay just to do the deal. Generally, is 2 to 4% of the purchase price. They have so say for example, you have $100,000 house. You would take 2 to 4% of that. It could be on the lower end or it could be on the higher end, and that is money that you would need to pay just to have the deal done. 2 to 4% of the purchase price. So there's something called points, and what point 1 point is 1% of the purchase price. So anytime you see points on any contract, 1 point is 1% of the purchase price. So you could have 1 point. This is what they charge. They could charge you 1 point. They could charge you 2 points. They could charge 3 points. They could charge 4 points. And like I said, 1 point is 1% of the purchase price. So the hard money lenders, they have the highest interest rates out of everyone. So it's generally anywhere between 7 to 10%. A lower credit card score is required. You don't have to have a high credit score when you go to them. They will loan you money for a variety of different types of real estate deals that you desire to do. If you desire to do fix and flips, they will loan you the money for that. If you desire to do buy and hold type deals, they will loan you the money for that. So you could just ask them what kind of real estate deals do they loan for. But it's not just limited to fix and flips. So, like I said before, the interest rate is the highest with hard money loan lenders. And they also have the ability to foreclose on the property if you miss a mortgage payment. If you don't pay the mortgage, they can come back and take the property and foreclose on it. The thing about hard money lenders is they give you a higher loan to value, and it's usually around 90%. They'll give you a 90% loan to value. So, meaning if the home that you are desiring to purchase is $100,000, they will give you 90,000, and then you're responsible for their down payment, which is generally 10% down payment. So the hard money loan lenders will give you 90,000, and then you need to come up with 10,000, and then that is how you purchase the home. So these are the 4 ways to finance rental property. There are other ways to finance rental property, but I just went through the 4 basic ways, but there are additional other creative ways to finance property. So this is the Love and Money Show. If you like the show, please hit the like button. It helps the algorithm as far as pushing it out so that other people can see the channel. Please hit subscribe if you're not a subscriber, and the notification bell next to it. Also, please leave a comment. Thank you for watching and have a good rest of your day.